Hi, this is Blaine Bocelli, and this is my July 2015 real estate report. Stocks were fairly stable last week. Stocks had an up and down week, mostly tied to talks to extend Greece's debt crisis. On days where progress was made on a bailout deal, stocks rose. On days where talks extended with no success, stocks dropped. Greece is on the verge of bankruptcy and leaving the euro. They owe a debt payment of $1.8 billion. They cannot make the payment, so no deal puts them in default and on a path of leaving the euro. China stocks dropped 7% on fears that the markets are overvalued. U.S. investors were again fearing higher interest rates as bond rates rose. The Dow Jones Industrial closed last week to 17,980.36. The Nasdaq was slightly down to 5,112.19, and the S&P was slightly down to 2,102.31. Bond yields rise sharply. More solid economic news at home caused investors to sell U.S. Treasury bonds on fear of higher interest rates. It is widely felt that the Federal Reserve will begin raising its key interest rates at their September meeting. The 10-year U.S. Treasury bond closed the week at 2.49%, and the 30-year closed at 3.25%. The 30-year rate ended last week at 4.30% for loans up to $417,000 and 4.50% from loans ranging from $417,000 to $625,500. The 30-year jumbo rates on loans over $625,500 are about 4.625%. The 5-year ARM rates are around 3.25%, and a 1-year ARM mortgage is around 2.75%. U.S. consumer confidence rises. The University of Michigan reported that their consumer sentiment index rose from 90.7 in May to 96.1 in June. That was the highest level since January, when it shocked experts when it was 98.1. For the first 6 months of 2015, consumer sentiment has improved at the highest pace since 2004. New home sales hit a 7-year high. The Commerce Department reported that new home sales in May jumped 2.2% from April to a seasonally adjusted rate of 546,000 units. This marked the highest level on new home sales in 7 years. New home builders said that the fear of higher interest rates contributed to buyer demand as buyers rushed to lock in rates before they increased further later this year. U.S. home resales jumped 5.1%. Prices continue to rise. The National Association of Realtors reported that sales of previously owned homes jumped 5.1% in May from April figures. This Friday, the Labor Department will release the June unemployment report. A higher number will show that the economy is continuing to improve. An improving economy puts pressure on the Federal Reserve to raise its benchmark rate, which has been near zero since 2008, in an effort to lift the nation out of a recession. There has not been an interest rate hike since 2006. Expect mortgage rates to rise with the high number and to fall with the low number of jobs created. I hope you enjoyed this monthly report, and have a wonderful 4th of July. Bye-bye now.